All right, gang, let's get a quick audio and video check. I think we should be good to go. Welcome to Charts and Coffee. Happy Tuesday, everybody. Good to see everyone. All right, so welcome. Let's get to it. First things first, let's take a look at the economic calendar, not only for today, but for this week. And what we have are a number of high impact hot zones. And by the way, this Forex Factory website, don't let the Forex throw you, because all you need to know is what kind of events are happening. PPI, Powell, if you're playing pound and the EWU like I am, Bank of England events, FOMC member daily, 10-year bond auction heads up for the ZN and the IEF, right? So I love this calendar. It's the one that I've used. Forex Factory has been around for a long time. If you're a Forex trader, you know how helpful this calendar is. And then, what we're keying in on are the red hot zones. This is where that terminology comes from. Just that simple. So you might say for the first time, Ron, there's a huge list here. How do I know what to focus on? Just take a look at the color of the icons, right? And that's for me what I've been doing since the early 2000s. So really easy to understand, to decode what high impact events will be. All right, so we've got plenty coming up. So just keep an eye on that. I think that's going to be, by and large, the dominant position. I should say imposition. Would that be a better way to put it? That's going to be the dominant way that I'll be positioning around risk, and that's going to be all those hot zones. In the meanwhile, I think it's really important to remember that all the indices have gone into, returned in many cases, to the double green structure. 8, 13, 21, 34, bullishly structured, back in play. And that's even after the Federal Reserve has announced the taper. So, let's stick with what's happening. Let's trade what we see and go from there. All right. First question is, hey there, Michael. All right, let's dive into these questions. And the first one is XLF, financials. So with financials, I will say this, Michael, the 21 exponential was absolutely in play on the 4th of November. So that pullback, that green propulsion dot, represents the 21 EMA and the 21 propulsion tool, which are, yes, one and the same in terms of where they're located on the chart. But remember, propulsion's a self-correcting exponential moving average. If it's not there, I'm not going to be focused on that level as a potential support or entry. Since then, we're sort of hovering. So nothing I can do with where we are right now And the next time I can do anything would be closer to, say, 39.70. Now, that doesn't mean we can't look at financials at all. Let's go to that next big grouping, which is the KRE. KRE, the regional banks. This is a better looking uptrend. It's a more established uptrend. So I'll be continuing to wait for pullbacks on this one. We can look at not only the 13 sitting right here. We've got a VWAP in this area. We've got a nice volume ledge in this area. There's a lot to like on the KRE. In many ways, I like this one, and I am in this one. We want to continue to play this trend. And by the way, if you're in the futures room, options room, mastery, this is a trade that we've had on since the pullback, and we're going to continue to take advantage of pullbacks. So you might remember that alert from some time back. Now, Michael, back to your XLF. Remember, we can look at other heavily weighted stocks within the XLF, right? One stock that pulled back again on the 4th and on the 5th was JP Morgan. So when we sink into the wave, when we sink into those 3 lines of the wave, that's the opportunity, that bearish momentum in the zone. So keep an eye on some of the individual holdings within the ETF, and you might get some interesting setups in lieu of that broader tide, right? You can play the individual boat, as I like to teach, not the tide. And that comes from years and years of being on the water in college, knowing that relationship ingoing and outgoing, incoming and outgoing tides. All right, so AJM, yeah, same thing on that XLF conversation. Great question on JP Morgan. It is dip buyable. I just don't want to do it now, nor did I want to do it yesterday. We're pretty precise because we've got the tools to do it. What do I mean by that? Take a look at this Darvis that's been already hanging out there. We hit that on the 4th. Take a look at the wave that's already sitting out there showing us support from here to here. Already hit that too. What did we do neither of yesterday? We didn't hit it. So not that it's not buyable, the timing is not as ideal as using the tools that are on this chart. Darvis, wave, and that would have put our entry ideally on the 4th or on the 5th of this month. Not necessarily yesterday, but clearly very viable. All right, next up is in terms of seasonality, how much do I think URA has hit the ceiling? I never prioritize seasonality. I will talk about it. I will consider it as a factor, but I will say, let me make sure, Nikolai, wonderful question. But I never prioritize seasonality. Seasonalities are probably some of the most abused and misused tools in the market. That being said, after we have a clear read on the trend, the technical price-based trend in a market, then we could start asking ourselves, how do seasonalities affect what people are thinking and the rhythms, right? The tendencies, the rhythms of the market. So I'm in URA. We have been for a while. And frankly, I don't have a problem with the long URA because the trend on the URA, trade what you see, is absolutely in place. But if I take a look at what takes place throughout November to December, I think the seasonals are a nice wind at our back in terms of the position and URA. So that was a bit dip we bought. If you're in the live trading for the ETF class, if you're in the mastery, we bought this dip. That is what I live for. Double green, come on down into the wave, and we're going to continue to look for higher highs here. The next stop on URA, because we've hit the first target already, is likely going to be in the 33 area. So that's what's next for URA. Okay, ConocoPhillips. I love the question about energy. Awesome. So do I like the structure here? Absolutely, 100%. Now, when we're talking about ConocoPhillips, remember that we're talking about a narrative that's attached to this, right? So anytime I'm going to play oil stocks, I should already have a reason to be long oil, which I am. So, and the long oil position is nothing new. This is a double green. You know how that works, right? So good old double green. And even though we've recently gone yellow, as you can see here, that's not a problem because we're going to do what? We're going to respect the trend that was. Low probability setups, not that they don't happen, they're just lower probability, presume that there's a top, that we're going to pick it, and that every top is a precursor to maybe a reversal and not a retracement. And yes, there's a squiggly little line between a reversal and a retracement, but a reversal isn't about picking a top. There's a big misnomer about that. A reversal is about breaking key support levels. And I don't think we've done that yet. So we bought that dip and we're moving higher. And by the way, those of you that were looking for the volatility in this area, kudos, especially if you understood the volatility around OPEC. But that's over now, right? So this was an OPEC move. Fine. It's done. And it's going to surprise me to see us resume at least some bullishness, maybe not the uptrend because it's clearly not in place like it once was when we were double green. But if I like crude and we're long, and that's actually a good position for us now, I'm going to like a lot of the individual stocks. So as far as ConocoPhillips goes, I think you're riding a really good commodity wave, quite literally. But when you're thinking about ConocoPhillips, you're also exposed mostly to XLE, right? So make sure you're looking at the XLE ETF. This is boats and tides. This is starting with index sector stock. It's top-down analysis. It's looking at the index, or in this case, the top-down starts with crude, then to oil, crude oil, then to stocks. It's the sectors, then to the individual stocks. So ConocoPhillips would come only after clarity on crude oil and clarity on the XLE was achieved. And I'm fine with that. But that also means we can crack open XLE and see what else we can work with. So I would be fine with the buy, but you know what I'm going to say. I need a dip. So thank you for the question. Next question, PYPL. Did PYPL pop? We've been talking about PYPL for shorts. So if you're looking at one of the rare corners of the market that is double green and can be a short the rip, right? So there's buy the dip and there's short the rip. If you're looking for something that can be a short the rip, this is it. This is what we're looking to take advantage of. So if it moves higher, great. If it doesn't, there's not much I can do with it. So I'm not looking for a pop in PYPL. I don't have one yet. Am I looking for one? Sure, but I don't have it. And to how high? That 242.40 would be a really cool level. 242.40. All right, next question. How do I know, besides double green, that a stack is about to trend and go out of chop? So you're asking, how do we tell the future? We don't, my friend. What can we do? For example, Apple. Do I know if it's about to trend? I mean, the more green grab candles we see, it would imply, it would suggest, it would sort of be the required structure visually on these charts to let you know that a double green is possible. But this is something that I want to mention, and I might use this word in a way that is unusual, but the word front run is not just a financial term. I know the connotation is a completely different word, but let's just use it as we would if we were not traders and just laymen, lay people. And that is, don't jump ahead of the process. I'm just observing. I don't want to think about whether or not this is going to go double green, because if and when it does, I'll know. Are there ways that I can have an alternative confirmation, right? So I don't want to encourage, well, this is going to go double green, so let's start buying the dip. I really don't want to do that. So what can I do? I can use an alternative way. And that is by looking at the grab candles and by looking at the propulsion dots. So I'll start looking at grab candles. I'll start looking at prop dots. And there's an alternative in that regard to, rather than waiting for the JT multi, using another set of tools so we still have an objective way to trade this market, to find the trend. And oftentimes the combination of grab and propulsion will confirm a trend more aggressively and therefore before the JT multi. Okay. So again, I don't know what's going to happen. We never do. I don't want to front run my process, which is waiting for that green over green, if that's the way that I want to confirm the uptrend. But what I can do is just use a more aggressive and alternative process. I hope that helps, Tim. All right, next up is, let's see here. Bear with me. What rotations are taking place this week? Jamie, I have a love-hate relationship with that term. Mostly hate, but love-hate relationship. So first of all, rotation is something that we will never see coming. We can sort of shorten the list of where rotation may happen by looking at environments that are very strong, parabolic even, corners of the market, stocks, sectors, indices, and then looking at lagging, if not even weak and maybe even sort of uglier corners of the market. I call it the Ferris wheel analogy, where you've got something at the top view and you've got something at the bottom view. And because of that top and bottom view, we know that the rotation takes things that were at the top. Investors take profit that moves down, and they will then take those profits and put them to work elsewhere in the market. So that's one way we can sort of narrow the list down to where it's going to happen. But rotation is not always the dominant factor. What's not talked about enough is what happens when money comes off the sidelines. What happens when we see more broad participation? And a lot of times rotation is talked about way too much and participation is not talked about enough. There's money coming off the market. I don't see any significant rollovers in sectors while others are surging. I just see more surging. And I think the environment that we're in right now is very much, Jamie, a participation environment. Okay. Thank you for the question. Excellent question. Hey there, Tom. I just finished reading What I Learned Losing $1 Million. Awesome. I love that. Great book. You enjoyed it? Oh, I'm so pleased. Tons and tons of notes. Thanks for the tip. Oh gosh, my pleasure. It's my favorite psychology book. Not, there's psychology books where someone sits and tells you, this is what we tend to do and think about it this way. And those are great books. I find them a little dry. I like the fact that this is a story and we get to have sort of our own epiphanies about where we identify our nature as traders, our bad habits as an individual in the book. So it becomes sort of a custom ride through this trader's loss. But there's so many great trading books out there. That just happens to be my favorite by a country mile. So pleased you enjoyed it. That's awesome, Tom. All right, next up is I'm interested in Apple for a longer term trade. So Garrison, longer term is fairly subjective until we talk about a specific interval. For me, longer term is either going to be daily or weekly timeframes. Daily and weekly timeframes automatically then map to a longer duration, meaning a longer period of time in the trade. So I don't know if that's what you mean by long term, but I'm going to have to presume that. If you all have, by the way, a specific time interval that you're looking at, let me know, and then I'll be happy to bring it up. So you're looking to pick up at the money calls or debit spreads for February. If we pull back to 140, 145. So I think my level is just a little bit lower than yours, but I think we're on the same track. I don't know that I would go with February. I might look further out if I have a longer duration setup, but at least 45 to 60 days, if not preferably 90 or more. My trigger, though, is going to start about 141.30 to 137. 141.30 to 137. That's going to be my zone. Thank you, Darvis, and 200 propulsion. And I'm looking at the lower end of the range because this is ultimately going to be an oversold buy zone, not a trend following zone on the daily, but on the weekly, this is a trend follow. And on the weekly, your trend follow would trigger differently, right? Your trend follow would be 142.5 to 137. So it's just a little bit different. Notice that the daily and the weekly don't have completely different zones. They overlap to a high degree. So it's a trend follow pullback on the weekly. It's an oversold buy. They're both buys on the daily. All right. So if you've got a longer term duration, then absolutely, I think we have the potential for a really good trade. Okay. Do I like TSM? Not yet, but it looks like it could give us a momentum setup. I want to see 4 blue grab candles in a row. When it comes to NVIDIA, this thing's in fuego. Nothing that I can, oh, I mean, you know what? Let me pull this up again. I was on the weekly. TSM, yeah, these have moved, right? If there's already a big momentum move, that's no trade. There's no trade there for me. Anytime a market's already making higher highs, it was either a momentum breakout, and that trigger for me is in the rearview mirror, or there was a trend that preceded it, and still that trigger for me is in the rearview mirror. So thanks as always for being with me here for Charts and Coffee. I appreciate all the questions. Didn't quite get to them all today, but please feel free to, as soon as I send out the link, feel free to put your questions in, because I just go right down through the list, just a little bit more than I could handle in 20 minutes here today. But I'll see you all in the options room and in the futures room in just a moment. All right. Be good to each other. Have a good one. Keep an eye on that economic calendar, and I'll see you tomorrow.